There's a new kind of money. It's called a stablecoin. You might not have one in your wallet, but it's already changing how people pay, save, and send money around the world. And as of July 2025, it's officially on the US government's radar. A brand new law just gave it structure, rules, and legitimacy. And that means this isn't just for crypto fans anymore. And here, I'm breaking down what a stablecoin actually is, how it works, what the law says, and why it could quietly reshape how your money moves in the years ahead. And before we get into it, let me know in the comments, have you ever used a digital wallet or sent money online to a friend or family member? It doesn't have to be crypto, just something like PayPal, Cash App, Venmo, whatever. I'm curious how many of you are already halfway into this space without even realizing it. And if this kind of info is helpful to you, go ahead and subscribe. All right, let's talk stablecoins. So first off, what is a stablecoin? At its most basic level, it's a type of digital money that's designed to keep a steady value. That's it. Think of it like a digital dollar that doesn't bounce up and down in price like Bitcoin or Ethereum. One stablecoin usually equals $1, and it stays that way. So if you're tired of hearing about crypto prices crashing or skyrocketing overnight, this might be the first kind of crypto that actually feels usable for everyday stuff. You see, the reason people started building stablecoins in the first place is because regular cryptocurrencies are just too wild for things like paying rent or buying groceries. One day, your $100 in Bitcoin is worth $120, and the next day, it's worth $70. That's fun if you're gambling or investing, but it's not great if you're just trying to send money home to your family or keep your savings from losing value. Now, here's where stablecoins get really interesting. Unlike your typical dollar in a bank account, stablecoins live on the blockchain. That means they can move across borders, across apps, and across systems, instantly, 24/7, without needing a bank to approve the transaction or take a fee off the top. So, let's say you live in the US and you want to send $100 to your cousin overseas. With a stablecoin, you could do that in seconds without going through a wire transfer or paying $20 in fees. And your cousin could turn it into local currency right away or hold on to it if the local money is unstable. And that's not a small thing. In a lot of countries where inflation is high and the local currency keeps losing value, people are turning to stablecoins to protect their savings. In places like Venezuela or Argentina, holding US dollars through a stablecoin can be a lifeline. So it's not just some fancy tech for Silicon Valley. It's actually solving real problems for real people. So then, how does it stay stable? What keeps one coin worth $1? Well, there are a few different ways, but here's the main one. Most stablecoins are backed by real assets. So for every dollar's worth of stablecoin that exists, there's one actual US dollar, or something just as safe like US treasuries, sitting in a bank account or a vault somewhere. That's called being fiat-backed, and it's the most common method. It's kind of like writing a receipt. You get one stablecoin because there's $1 backing it up. If you want to cash out later, you hand the coin back and get your dollar. That's the basic idea behind stablecoins like USDT, which you might know as Tether, or USDC, which is run by a company called Circle. Then you've got another type called crypto-backed stablecoins. These use other cryptocurrencies like Ethereum as collateral. But because those are more volatile, they usually back it with more than 1-to-1, just in case the price drops. It's like putting $150 worth of collateral in to mint $100 worth of stablecoin, just to stay safe. And finally, there's the algorithmic kind. These don't use actual money or crypto as backup. Instead, they try to manage supply and demand through code, adjusting how many coins are in circulation to keep the price stable. This idea originally sounded great on paper, but it hasn't worked out so well in the real world. Remember Terra USD? Yeah, that one collapsed in 2022 and wiped out billions of dollars. So the industry's kind of stepped away from that model for now. Now, I mentioned earlier that the US government got involved. That happened just recently in July 2025 when President Trump signed a law called the Genius Act. It's the first major law in the US specifically written for stablecoins. And no, Genius isn't just a catchy name. It actually stands for Guaranteed Essential Neutral Issuance and Utility Standard. The law requires stablecoins to be fully backed. one-to-one, with safe assets. Think cash or short-term government bonds. It also says companies can't mix your money with theirs. So if you buy a stablecoin, that reserve stays separate and can't be touched if the company goes bankrupt. The law also adds monthly audits, anti-money laundering checks, and clear definitions so stablecoins aren't treated like stocks or bank accounts. That last part is huge because it means companies finally know how these coins will be regulated. It removes the gray area that's been hanging over the crypto industry for years. And here's the part that really turned heads. Traditional finance jumped in. Right after the law passed, you had some of the largest financial institutions expanding their digital currency efforts. These are no longer just niche crypto projects. Big banks and legacy players are getting involved with new stablecoin strategies and digital dollar pilots. But it's not just banks. Large payment platforms are continuing to explore ways to offer dollar-based digital money, whether through stablecoins they issue themselves or through platforms that integrate with them. And some financial service companies have been experimenting with stablecoin-related features to improve things like cross-border payments or digital wallets. Now, does that mean stablecoins are totally safe? Not quite. Some experts worry that if private companies start issuing their own versions of digital dollars, it could cause unintended effects, like pulling money out of traditional banks or shifting how monetary policy works. There's also debate around whether stablecoin companies should get access to central bank infrastructure like Fedwire. Some say it's necessary for the system to grow, while others worry it could sideline existing financial institutions. Outside the US, there's another layer to this. In countries where the local currency is weak, stablecoins are kind of replacing it. That sounds great in the short term. People get access to more stable money, but over time, it can cause problems for local governments. If everyone stops using the local currency, it becomes harder to run the economy. And then you've got global competition. China's already pushing out its own digital yuan. Some folks think the US moved forward on stablecoin legislation partly to keep pace. Because if you let other countries get ahead with digital money, it can actually shift economic power over time. Now, what does all this mean for you? If you've ever been frustrated with bank fees, transfer delays, or international payments that take forever, stablecoins might be something to keep on your radar. They work more like programmable dollars. You can send them instantly, hold them securely, and use them in apps that are being built right now. And if you're a business owner, a freelancer, or even someone just trying to send money abroad, this tech might save you time and money. Just make sure whatever stablecoin you're using is legit. Look for things like transparency, audits, and whether it's following US law. So yeah, stablecoins aren't some futuristic fantasy anymore. They're real, they're growing fast, and they're becoming a part of how money works, especially now that there are rules in place to protect users and guide businesses. All right, that's it for today, but I'd love to hear from you. Do you think stablecoins could actually replace the way we use regular money? Or do you have concerns about trusting companies with your digital dollars? Let me know what you think in the comments. And if you found this helpful, go ahead and hit that subscribe button so you don't miss the next one. We've got plenty more thoughtful takes on the financial changes shaping our world. Thanks for spending a bit of your day here. Talk to you soon.